Whether you're looking to change from a sole proprietorship to an LLC to an S corporation, or even considering going from an S corporation to a C corporation, there are certain things that you need to take into consideration. And in this video, I am going to break down for you exactly what you need to consider. I want you to like, comment, and subscribe so I can keep you updated so you're not missing out on any of this valuable information. Now, so as you're thinking about being a sole proprietors are like one of the easiest business to start. Anyone can be a sole proprietor because we are sole proprietors as individuals. That means that I am operating an individual business just as to myself. I don't have any partners. I don't have any members. I don't have any shareholders. I am the business owner, and I can just go out and start doing business. I don't even need to have a business license to be a sole proprietor. But what comes with being a sole proprietor business is I have no liability protection whatsoever. That means that any lawsuits, anything that happens, is all going to fall on me. It's all going to fall on my shoulders. So one consideration is definitely liability protection. And in a sole proprietorship, you have no liability protection. The next consideration is the complexity of operating that business. As a sole proprietor, it is super simple to operate. Once you start making money, get that first dollar, you are truly a sole proprietor. There's nothing special that you really have to do. Now, many of you may be thinking, what if I want to use a certain name? Where you can go out and you can file a DBA, doing business as, for example, Carla Dennis can be doing business as 123 Tax Services. I can file that DBA, but that's not necessarily required for me to be a sole proprietorship. So the complexity of running a sole proprietorship is super simple. The next consideration, though, is taxability. How will my sole proprietor be taxed? Now, when you're dealing as a sole proprietor, taxes are a really big deal because you're going to pay federal income tax. If you're in a taxable state, you're going to pay state income tax, but you also have to pay Social Security and Medicare tax. And Social Security and Medicare tax is 15.3% of your net profit. And this can really become a big deal. Allow me to give an example. If you're in a business and at the end of the year, your net profit after all of your expenses is like $10,000 as an example, the Social Security and Medicare tax at 15.3% is going to be $1,530 in addition to the federal income tax and the state income tax. And even if your federal income tax and state income tax is zero, your Social Security and Medicare tax will not be zero. You always are going to pay that on net profit. So the taxability in a sole proprietor is very heavy. You're going to have to pay more taxes. In addition, the fourth consideration is how do you get paid? As a sole proprietor, you're able to get paid out of that business by just taking yourself a draw. You can pay yourself at any time. So getting paid is really simple. However, when you are getting paid like that, you're not really going to be able to take advantage of any benefits because you're not going to be able to get a group medical plan, group vision plan, or anything like that. So benefits inside of a sole proprietorship are extremely limited. Simple, heavy taxes, very easy to start, but the actual benefits are not going to be that great. If you are thinking about transitioning from a sole proprietor to an LLC, when should you do that? My recommendation is to do that right around $10,000 in profit. The reason why I say do it at $10,000 in profit, because that's when you're going to start to see that self-employment tax increase. When you are an LLC is a formal business. You actually have to go to your Secretary of State and you actually have to form that business through the Secretary of State. So the level of complexity starts to increase because you actually have to do something to generate that LLC and to perfect it. That's the proper term, to perfect it with the Secretary of State. When you do that, the LLC gives you limited liability protection. That's the whole purpose of starting an LLC. LLC stands for Limited Liability Company. So those members that are in an LLC are going to get some type of liability protection. So when you are in a business that is going to generate liability, you definitely want to navigate from a sole proprietorship inside of an LLC. Now, the complexity starts to get a little bit more complex because, again, you have to go to the Secretary of State to set that business up. But outside of that, it's not much you have to do as long as you're a single member LLC. As a single member LLC, you're going to file your income tax return in with your 1040. You're going to file a Schedule C inside of your 1040 when you are a single member LLC. But if you elect to bring on members, you're going to now have to file a Form 1065, and it starts to get more complex. So when you're dealing inside of an LLC, the complexity is kind of on a scale as to whether you're a single member or whether you are a multi-member. Now, when you're inside of an LLC and we're talking about how you're getting paid, you're also going to take draws out of that LLC. But remember, just like a sole proprietorship, when you take draws out, the ability to deduct benefits is not really in your favor, because all of your health care, all of your medical care, and all of those things are going to flow through, and you're going to have to be able to itemize deductions to be able to take advantage of that. So an LLC is not necessarily the entity that you want to be in if you're looking for benefits. When it comes to the taxability of an LLC pays self-employment tax just like a sole proprietorship. The only time that I recommend a person be taxed as an LLC is when you are in a passive income business, when you own real estate as residential rental. You're renting out your property to others. Outside of that, you can form an LLC, but I recommend the taxability move over to an S corporation. If you are thinking of going from an LLC to an S corporation, that is probably a good thing to think about, because you're probably starting to get hit with that self-employment tax. You're probably bringing on other people inside of your LLC, and it's going to be better for you to operate inside of an S corp. Now, I want to make sure I clear this up. Many of you may be thinking, well, if I'm an LLC, how can I be an S corp? I want to make sure I'm clear. You can form a business as an LLC, but you can change the taxability, how IRS in the states tax your business, to an S corporation. I want to be crystal clear on that, because many of you may be thinking, I need to close my LLC in order to be an S corp. You do not. You change the taxability to an S corporation by filling out the appropriate forms to do so. Once you're inside of an S corporation, the level of complexity increases, because when you go to an S corporation, you now have to file a separate tax return every single year. You have to file an 1120S. And when you are filing an 1120S, you know what else you have to do? You have to have minutes. Every single year, you have to document and have a board of directors meeting every single year. And the reason why you have to do that is because you are now operating as a corporation. And if ever you are audited, IRS is going to ask for your corporate minute book. And they're going to want to make sure that you are doing all the housekeeping that you need to do. So being inside of an S corp is a lot more complex. Also, when you are inside of an S corp, you have to pay yourself on payroll. You have to take out a paycheck. So when you're thinking about getting paid through an S corporation, you are going to get paid at least two ways. You're going to give yourself a paycheck. The paycheck does not have to be every week, every 2 weeks. You can actually give yourself one paycheck a year, but you have to have officers' wages every single year. In addition to the officer wages, you're going to take what's called distributions. That's taking money out where you literally just write a check to yourself and you take a distribution out of your business. You have to take officers' wages And you can add to that a distribution. Do you have to take a distribution? No, you don't. But you want to make sure that you take offers of wages in the least amount possible and you take a distribution. Why am I telling you that? Because S corporations are not subject to self-employment tax. You're not subject to that 15.3%. However, I want to put a little caveat out there. If you do not take wages, IRS will come in and they will reassess some of your distributions to wages, and you will pay self-employment tax on it. So to avoid that, pay yourself a salary and you don't have to worry about that piece of it. Now that you're paying yourself that salary, benefits become a bigger deal for you. When you're on salary, you're now paying into state disability insurance. The company is now paying to unemployment for you. And if you have other employees in your business, you can get group health plans and so forth. So having an S corporation leans more toward the ability to get great benefits. You're now inside of a corporation. You're going to have your corporate bank account and you're going to be able to do more inside of the corporation. So in terms of taxability, the taxes can be low because you're paying that salary, you're avoiding that self-employment tax. In terms of complexity, you're about at a medium range of complexity. In terms of limited liability protection, you are at the top. You're right there at about 90% of liability protection because you're in a corporation, and corporations by nature have great liability protection. They are like the mother of liability protection. So an S corporation is a great vehicle to be in, and my recommendation is that you navigate from an LLC into an S corporation when you're hitting about $50,000 in net profit. Why that number? Because you're going to be hitting a lot of self-employment tax, and you're probably going to be best served being on a W-2. The transition from an S Corp to a C Corp, that's a big move, but it might be a move that you're looking to do. When you go to a C corporations have ultimate liability protection. They're at the top. There is not another entity that is going to give you better liability protection than a C corporation. Why do I say that to you? Because a C corporation is not a flow-through entity. Income does not flow back to your individual tax return. So there's no connection between you and your C corporation. In order to take money out of your C corporation, you need to be on payroll. You need to take a payroll check in addition to dividends, not just dividends. I know a lot of you out there say, oh, I'm in a C corporation, I can get paid by dividends. You can, but you need to make certain, number one, you're on payroll, and then you take dividends out of that corporation. It's very important that you understand that. The complexity of being in a C corporation is at the top. You have to do minutes. You have to have financial statements. You have to have balance sheets. And quite frankly, you're going to need to have an accountant. But it may be very well worth it because when you're in a C corporation, the income from the C corporation is taxed at 21%. And then you get to choose how much actual income you're going to take out of your C corporation that is going to be taxed on your individual tax return. So if you're considering going from an S corp to a C corp, my recommendation is that when you hit about $250,000, about $225,000, $250,000, you want to navigate into a C corporation. There's lots of reasons why you might want to be in a C corporation, and you're going to be able to pick those up in another video that I will do for you. But I just want you to understand that there are 4 considerations when you're thinking about navigating from one entity to a next. And those 4 considerations are liability protection, complexity, taxability, and benefits that are based on how you are actually going to be compensated out of your entities. And now that you know better, I expect you to do better, which is why I want you to like, comment, and subscribe so I can keep you updated on all things tax.